Boom. Who's going to hit it this time, boys? Me.
Wednesday Live. Coming at you, MLO Live. Wednesday episode.
Hump day.
Hump
Hey,
day.
what day is it, man? What day is it?
Hump day.
Let's do a little vid check. I'll bring it around. Little sound check. 1, 2, 1, 2. We got a good one today, guys.
Yes, we do.
And that beat, once again, it never gets old.
Always gets you in a good mood.
There it is. We're just letting it shout today. Everyone's just like, I feel bad for the podcast listeners who can't see that we're just dancing to this music.
Just picture stick figures moving their arms.
Well, we all know Casey's got the best dance moves in the Pacific Northwest, right?
Oh, I tried.
Did your daughters give you those lessons you were saying?
They did. They told me to upgrade now to go more of a box.
I don't know what to do with my hands.
I don't know what to do with my hands. It happens.
I love NASCAR.
Here we go, guys. Here we go. MLO chiming in for our usual live studio broadcast, right, guys?
That's right.
Yes, sir.
Wednesdays at 3 p.m. at the earliest week or on time as we can.
Yeah.
We kind of miss it, but we're taking care of our people. So this is a live broadcast recorded here in the MLO studio. Today we're going to chat about, I thought it's pretty good put together. This was Kemper's idea, the 10 costs to consider when buying a home that are outside of the down payment, right, Kems?
That's right. It's a question that keeps coming up. What do I need? And we just didn't want to just talk about down payment and closing costs. We want to talk about every cost that's associated with a possible purchase.
Yeah, we got 10 things. Who's got a new word that doesn't include
Unpack.
That we're
Or
going to
dive in.
unpack.
dive in, unpack, review? It sounds very, very formal, but I think it's usable. Would
It
you
is.
agree?
Yeah, no, today's a good review period, and we're just going to review everything that we have to give you.
Yeah, kind of like in school, everyone's going virtual school. It's been announced recently. So we're going to take that red Sharpie and we're going to put a little ink to the paper, right?
Yes, we are.
All right. These guys are like, oh my God, what are we dealing with today?
He's doing his good one.
I've had a doozy. I work through the weekend and it's the top end of the season. So it's 7 days a week. And honestly, the podcast is outside of spending amazing time with my beautiful wife. This is the next best thing in my week. So I'm stoked to be here having fun with the boys, but let's dive into those 10 things, guys. So since CK brought it to
Sure.
attention, let's go number 1. These are things that they might include some of the closing costs, but in detail that you might not understand, right?
Correct. Yeah. So I think number 1 came up was earnest money, right?
Yes, sir.
Mhm, mhm.
Earnest money is that good faith deposit to the seller, showing that you have interest and some skin in the game of making an offer on their home that they're selling. So, what are you seeing out there, Casey, on EM money as far as what is required? Give us maybe a example on a 300,000K house, 500K.
EM
What-
for earnest money for
That's right.
everyone that didn't
Yes.
pick up on that. Slip
Yeah,
it to you.
and we'll throw that in there. EM, earnest money. But what we see here, Pacific Northwest, Oregon, Portland, Oregon, we're typically going to see about 1% for earnest money. So a $300,000 purchase, that's going to be $3,000 that you would put front, and that's going to be, it's your skin in your game, your earnest money for the transaction, showing that you are, willing to step forward and commit into this transaction. So 1% is something that we kind of see typical. I know, a seller, doesn't necessarily need to require 1%. I have seen, fortunately on some VA loans and stuff, trying to help that veteran out, or maybe someone that doesn't have quite the full earnest, accepting maybe a little bit less than standard percentage.
point.
But at the end of the day, they still want to see some type of money put down to the table. One thing that's another part to consider is the location and area you are purchasing in, because different areas do have different standards for earnest money requirements. So I know California can require 3% for earnest money. So that obviously is, 3 times higher than what we see here. And so that, could be
Great
something different.
point. I'm just going to jump in. Like, State by state's different. Every state has different expectations and a different real estate environment. To Casey's point, California is very pro seller. So they're going to demand higher earnest money early release of. But to stay in topic of the 10 things to know, earnest money, generally speaking, 1%, right? So if you're buying a $300,000 house, $3,000 up front gets deposited into the escrow as a good faith earnest money. And everybody asks us, does that get applied to my down payment? CK, take us on that. What, like, explain that, because everybody asks us every time. Even if you said it, question. Everyone wants to know.
Yeah, everybody wants to know, does that amount require or go towards my down payment? And the answer is yes, you can use that.
Yes, it does. So if your cash to close was $10,000 and your earnest money was $5,000, your 10,000 total cash investment would then at the end be reduced. That 5K would be like a credit, right, Casey? So then you owe another 5 to equal that 10. So it doesn't wash away. We often joke that it actually goes to us, the mortgage advisor. So that earnest money is how well you think we performed up to now before you got keyed. No, I'm just joking.
That's our joke, though. But Addie's making a good point.
It's like $20.
Yeah, if your earnest money's $3,000 and total cost, for you at the end was 20, you'd be coming with 17,000 to the table because you already put your earnest money down.
100%.
Yep. And before we go to number 2, we got a couple shout outs here. Our boy Roland Cochran. Love you, brother. He's saying the studio is looking slick. He's down in SoCal, San Diego. Cool to be watching him. And he's been throwing down some awesome lives.
Yeah, he's stomping around my old Navy background there. So,
well, Roland's live more than I'm on my phone throughout the day. The guy is just cranking on a lot of great content, inspiring people to gain financial freedom. But good guy. We had him on our show a few episodes ago. Thanks, Serena Cruz throwing down that I love the videos.
Awesome. Thank you, Serena. We appreciate that.
Yeah, we love you too. Running to number 2, CK, since this was your idea, let's bring us to number 2. Chicka-toom-toom.
Cost of buying a home, and we're talking about escrow accounts.
Yeah, escrow accounts is a big one. So I think the biggest cost between, at least in the Pacific Northwest, there's a couple different dividers between Washington and Oregon on what your prepaids are going to be. So in Oregon, our taxes are paid, guys, on November.
Yep, November 1st, they're due. And if you pay them, I think before that, you get a 3% discount. So right now, if you were to be purchasing a house, we're collecting right around 12 months if you're closing in the month of August. So a prepaid item, it's always being prepaid. It's something that's, if you were to sell your house the next day, the new sellers or buyers would be crediting you back those funds. So keep in mind, it's a prepaid item.
It's a confusing thing. So like, we're not going to break it down into 2 sentences. Just know that you need to understand and work with your mortgage advisor, depending on what state you are in the country, on how many months are required based on when you are closing your real estate transaction, because it can range between 6 months and up to 14 months, depending on the state, right?
That's right. And your homeowner's insurance is going to be lumped in there, and sometimes your mortgage insurance as well.
I think, yeah.
Oh, for listeners, obviously, and people watching, if we didn't quite explain what the escrow account is, that is the account that we're going to set up that you're going to put your property taxes and home insurance in place that then will be paid on your behalf each year for those taxes and your home insurance. So when you're purchasing a home, if you're typically putting less than 20% down, you're going to be required to have an escrow account. And that's just to ensure that those property taxes and that home insurance is going to be paid on time at the right time every year for the lender. And we're going to make sure that that's there. And so that's why that escrow account may be required for you.
Great point.
Other parts in other programs out there have different escrow account requirements. So a VA loan does not require you to have an escrow account, but many lenders will require you to have an escrow account. So there are some factors in there that, it's good to be aware of as a buyer. FHA is another one for the most part. Yeah, they require you to have that escrow account, mandatory, I think. And And so that's just for you buyers out there. That's one thing. It's the account that we're setting up for your property taxes, for your home insurance. And I'll let CK take it away with kind of how they are collected. And it does depend on the timing of the year when you're buying.
Oh, yeah. And just to jump in real quick, like that is just a really big importance. Like we're going to do another episode on the breakdown of escrow because we could talk freaking 40 minutes over it.
That's
right. Real easily. But just to know, I like to explain it in buckets. So you have your closing costs and your prepaids together. Those are your total closing costs. So a lot of people don't understand the difference, but it's important to know, generally speaking, at least in our area, you're paying about a year in advance of property taxes and insurance, which usually equates for about 50% of your total closing costs combined. So just put that together. But I think we like to note that because another easier way to explain it too is, pardon me, you get your keys, you close, right? Your taxes and insurance are taken care of for a year, generally speaking. All you need to focus on, if you've elected to have an escrow account, which is required for sub 20% down payment buyers, that monthly payment, which includes 1/12 of your property tax and insurance for the full year. So once you've made 12 payments, those little slivers of the cheddar, as you like to say, have been deposited into your escrow account in your name, and then they get paid. All you got to do is focus on that payment. And most mortgage advisors, unless they're complete sleazeballs, are always going to quote you a monthly payment that is all in. So you got to just make sure that those taxes and the insurance are very, very accurate, and you should be on pace there. So moving to number 3, because I want to, 10's a lot. Oh my gosh, I don't do things in sets of 10s, guys. Like I'm going to need a winder break here pretty soon. But
we'll have an intermission at 5. Don't worry about it.
Yeah, seriously.
That's when we'll rebeat it.
We're playing 36 holes here. Christ almighty.
Hurry up.
Yeah, with no mulligans.
I'd do it.
So what are we on the next one?
We're going to roll with the origination costs.
Yeah, that's a big one. And CK, rope that down because you've been on a lot of different platforms, been through a couple decades of the ride here. So break down the origination costs.
Yeah, I've definitely worked at some places where they require 1% origination, which would be 1% of your loan amount. So $300,000 loan amount would be a $3,000 upfront charge that would be required to be paid by the borrower or in a refinance situation into your fees. But talking about origination, you might see an underwriting fee as well and a processing fee. So those are just some fees to be aware of. It's all counted into your APR, which is a good way. We've talked about in our last episodes.
APR,
is how to shop your loan and see how we match up, or one quote might match up to another one. The lower the APR, the lower total fees typically.
Yeah, and I think, when it comes to origination fees, I think one of the most confusing thing right now is someone might call a lender and they'd be like, I can get you X rate.
Right.
I can get you this rate, and I'm not going to charge you any points for it. And points, if you haven't listened to the MLO series, points is the cost associated to attain the rate that's locked in and promised. So it might be $1,000 for that rate, or it might be no cost for that rate. So you might get a lender who is trying to earn your business and say, hey, I'm not going to charge you any points for this, but they're not verbally disclosing that their origination charge is 2%. So if you had a $300,000 loan, that'd be $6,000 in closing costs. And the other lender that might have had that same rate for only a $1,500 cost would have actually been cheaper. But that other lender on the phone has fooled you because they could say they're not going to charge you any points. So that's one of the things that I don't like about our industry is that you can shuffle around. And that goes back to your point, though, with APR is the total equalizer.
And I think you do a good job with it to break that down. Like Addison was trying to say, the way I look at it and I try to explain to clients is you're going to break it down to 3 sections. You're going to have brick and mortar fees, the way I like to put it, your underwriting fee, your admin fee, your processing fee. You're going to see some type of those forms when you have lenders that have physical locations for the most part. Coming back, then you have a different platform. So like Addison mentioned, are you paying any extra cost to get that rate? If so, that could be a discount point that you're paying. Now, depending on that lender's platform, maybe they do charge an origination to do that loan, which would then be the commission for that loan officer or the lender. And so that could be a additional cost. So the way I try to explain to my clients and coach them into, at least when you're shopping your lender out and looking at different quotes, is exactly what are all those fees, and try to look for those because at least your originations would be put up there at the top with your brick and mortars, your admins and stuff. And then you want to see, are you paying any points for the rate? And is that lender charging you for his commission?
Mm-hmm. Yeah, good point. So how many have we gone through? 3 so far?
3
to 4.
It's a marathon, guys.
It's a marathon. You got to stay with it, though.
When we said that we were going to do a podcast, I didn't think I'd become an Ironman athlete, but going to number 4, we got inspection. This is a big one. I think this is the biggest one, Christian, for out-of-pocket expenses right off the bat, because it has nothing to do with the loan, nothing to do with the real estate, down payment, closing costs, none of it. So talk to me what you've seen in our market with inspection and what else, because there's more to it. The scopes, the radon, etc.
This is one that I truly think is important to have a discussion with your first-time home buyers. A lot of people that have gone through the purchase process before know this stuff and they've gone through it, but for a new person going into this, they don't know. They know that they need an inspection.
Mm-hmm.
They really don't know exactly how much that costs. Is it 200? Is it 1,000?
Yeah.
What is it?
Can my grandpa do it?
Exactly.
Mm-hmm.
My dad was a contractor. Can he just go and look at it? And
my dad worked at Home Depot 4 years ago. Can he do it?
That's right. Well, he can if he wants to.
Oh, good.
And if the seller is willing to let him walk the house. But the whole thing is, we have licensed inspectors out there that are going to go through the process with a fine-tooth comb, and it's probably going to be the best money that you spend if you have a good inspector. And you might have 2 or 3 before you find that perfect home for you. So keep that in mind. To average inspections, $400 to $500, depending on the square footage of the home, size, and everything else. If it's a condo, it might be a little bit less on those type of fees. But there's also sewer lines inspections where they take a camera and check for any roots that are intruding into the sewer line. That's
my biggest one, because they literally shove a camera down the sewer line and make sure there's no cracks or roots embarking upon that pipe, and that repair can be anywhere between $5,000 to $7,000. So it's $100, $200 to have someone run it through, and it's totally worth knowing or not knowing. It's very common, at least in the valley where we're at, for that to be a big issue, particularly in Salem. For some reason, that is extremely common. And actually, there was a sewer scope inspector. They'll usually do it. They'll run the line through, right? And then they'll send you a link then with the video. And this one guy, when we did on our house, was like the best. He was like, he did a whole full commentary of this thing, right? Like, we're at 10 feet and we're at 12 feet and we got roots on the right. Oh, nope, that was just a rock. We're good. And we're going to continue running. It's kind of funny to see someone running a pipe.
Something that you got to think about when you're buying a home and protecting yourself. We have radon inspections or radon detectors.
That is some big things up here in the Pacific Northwest.
Yeah, for sure.
We are seeing that, and there's mediation for that. So don't be scared of a house that has it. There's mediation for that. Pest and dry rot inspections. Sometimes our VA and our FHA loans, if a appraiser comes out there and sees something, they may require a pest and dry rot inspection. A couple $100 on that. Mediation as well. Roof inspection, oil tank detector. And I got lots of stories, and I could sit down and talk to you why these are important, because in 18 years of lending, I've seen horrible things when people have not done them, and I've seen amazing things where a client saved $50,000 to $60,000 having the clients do the repairs prior to them moving in. Almost took a closing cost credit for $7,000 after they dug up the oil tank and found out there was some decontamination. It ended up being a $35,000 to $40,000 fix. So we got a comment here from Matt. Although the inspection, the spec, we love them, and we're actually going to do we're going to throw a background song again for Matt.
So Matt's throwing in, although the inspection is a sunk cost, can you speak to some of the benefits that might come out of an inspection? For example, things that are found that can justify getting a decrease in the price / closing costs. Ooh, a shimmy.
I got one for you. I got a little story for you. Was it Matt?
Yep.
Matt, thank you. So I went through and we were looking at a few different homes, and we're looking to fix and flip a couple properties. So we're just going through homes. And personally, like, I am kind of a tight guy, right? I just don't want to throw $400 away. Like, man, $400 bucks,
you're
right?
cheap.
Like, I'm just cheap, right? Just a cheap guy. But home inspection is needed because, I mean, truthfully, I can't stare at a home and tell you, yeah, looks good. I know everything about it. It's a good investment, right? So I hired a guy, came out, and I thought this was the property. I mean, all the numbers were there. This was my moneymaker. And what did he find, Matt? He found really, really, really bad crack in the foundation in the center of the house, which you would not see unless you crawled in there and you were in the center of the house to find this.
Wow.
So it was a $50,000 to $60,000 repair after I had bids looked at. And at the end of the day, Matt, I had to walk away from the sale, cancel my contract that I was in contract on, and terminate because the cost out, it took away the benefit from me buying that home. So the $400 was well worth it.
Mm-hmm. Yeah, and crack foundation is a good point. And to kind of get to it, the way I explain it, Casey, is like, okay, hiring an inspector is going to do two things. A, it's going to identify red flags, things that would make you want to step away from this entire deal. But then it's also going to build out a 10-year plan. So that inspector is going to go under the hood and be like, hey, this is going to wear out in X amount of years. This is something you should look for. But in regards to answer Matt's question, and there goes the music. Gosh, I love that beat. To answer Matt's question, there are a lot of people that will use it to kind of negotiate, if you will, with the sales price. Now, it's a hopeful strategy, which doesn't always work. And it's not my plan, but there are things that are notable. For example, roof life. If the roof is on its tail end and the inspector is saying, hey, this is going to be done, this is something that needs to be addressed. Another common one, windows that are not sealed. If they need to be resealed, then they're allowing moisture leaks underneath the house. That's a big thing. So it's not always necessarily a way to, hey, I'm going to offer really aggressively, right, Christian, and then hammer them down. But it is a way to at least address deferred maintenance that isn't ridiculous. And it's a tough subject line because some people just get ridiculous.
And you made a point too, because it is that seller. Like, I even came back and tried to pull that play. I'm like, oh, great, I'm gonna hit him for another 75 low. If I pay 50 for the foundation, it's 25 bank. And he just told me kick rocks,
Right.
Like, he just wasn't even willing. I mean, the house was already priced lower, but you start throwing in flags like that. Yeah.
Well, there could be just a small little punch list too, where you're able to, if you're a little bit handy, you can do those things. And
Totally.
so if you can get an extra $1,500, $2,000 added to your closing costs, and it could just be like some peeling paint where you can get out there and scrape and, match it up. Those are the little things that it could be an advantage to help you with some of your closing costs and your prepaid. So yes, there are times to take the repair addendum credits, and there's times to have the seller fix it prior to you going in.
Great point.
No, and I can argue both sides. Obviously, for me, I'm always pro our client. But I also think in a market like this, where it's competitive and it's hot, you can't be like, oh my gosh, they didn't Swiffer the garage for 4 years and you want a $400 pressure washing credit.
You can't get that?
I mean, you could chalk it up, but I just think it's just unreasonable. Like, I've seen some real doozies out there. Like, I saw a deal fall apart, guys, because this was like in March, and the buyer was like, we want the gutters cleaned up. Okay, so that costs like $200-$300 max to have someone go around and clean out the gutters. These sellers were so frustrated because they were already giving them a great deal and being very accommodating throughout the negotiations. Now they wanted these gutters cleaned up. And the seller says, no. Cleaning gutters are a part of home ownership. So when you acquire this property, you can get on a ladder and do it. Literally 2.5 weeks in a contract, they walked over a my dick's bigger than yours on paper. So you really got to be careful. Like
You do.
and I always encourage everyone, whether it's on our team, we do this with operations, buyers, partners. Look, oh, Casey got a little Siri go off. Didn't
Siri.
understand that.
I don't even have Siri.
You don't even have an iPhone.
Yeah, how do I have Siri?
Might have been
What are you
mine.
talking about?
I don't know. We're all on silence. That's crazy. See, even Siri takes it personally. That is when you know it's sensitive.
That's
when
when
you're
you
bringing
know
it up.
it's a sensitive topic is when Siri, which is not even on Android, tells you home inspection. Just think about it.
But here's the thing. Look at it. You got to look at it from the other side. Look at it from the person that you're sending the addendum to and how they've lived in this home, and it's very personal, right? It's their home.
Right.
So if you're not putting any color or communication, and that's where the agents are going to help
Yes.
you be the buffer on that and call and be like, hey, look, I know this addendum is going to be like a middle finger to a lot of the things that you might think. And, you know, your clients might have cherished that naked angel water fountain in the backyard, but we need it removed prior. That's your agent's job, right,
Right,
guys, to
for
communicate
sure.
that, not
For
piss
sure.
grandma off.
Yeah.
And then she throws your Werther's originals at your addendum and
They're
says,
the
get
best.
out of here, you know? That was a run.
The Werther's original. Those are the best.
That's awesome.
All right, what are we hitting for number 5?
Case is like, I'm over this, number 5. We got one more comment too. Greg Corbett out of Arizona throwing out great stuff at those sewer scopes, huge, especially for older homes. Appreciate the content. Yeah, they are for
I
sure.
appreciate the
It's worth a couple $100
contacts
bucks.
and the message shout outs.
Oh,
for
last
everybody right now. It's
yeah,
great.
the upticks for real. Hashtag trending might be where we're at today. But to throw into one more on the sewer scope. Lastly, just because it's new construction doesn't mean you don't need a freaking sewer scope. Most people think it's brand new. The line's great, but here's what happens, guys. They've been building that entire home with no driveway or sidewalks foundationally poured yet. So they're driving those huge dumpsters, dropping off lumber, materials, everyone's working, but the sewer line's laid underneath. So it often cracks because there's nothing protecting it. So just because you're buying a new home, whether you're choosing to work with an agent or not, guys, wherever you're in the nation, get that sewer scope, new or old, right?
And even home
Great
inspection too. A brand new home can still
Yeah.
be inspected.
Yeah, don't overlay
We
that.
recommend it.
Big time.
Yes,
All
sir.
right, let's go to the next.
Next one's number 5, attorney. I know that our boy Carpenter here had some notes on this one, so I'm gonna lay it down to him.
We wanted to take this off in case it's like, don't take off the attorney one. I got things to talk about. So
Things to talk about the attorneys.
stage is yours,
I
brother.
know certain states do require attorneys on real estate transactions. So that's definitely something you want to talk with your mortgage advisor with and make sure if that's part of your state's requirement or something like that. But one thing I did see was in just a certain situation I had is that sometimes you might have to involve a real estate attorney for a transaction to where for mine, we were just looking at, cashing out and buying out a co-owner. So 2 people owned a property together. And there's a couple ways you can go about that. One option is using a real estate attorney. Other option is doing it through title with a real, you could do a real estate agent or not and draft up a purchase contract and pay title insurance to go through the full 9. Or you can do a real estate attorney who can draft up the documents for you, give you whatever their hourly rate is to do this and some of the recording fees that are required, and you're good to go. So what jumped out on me is we don't really see this that often. I know real estate agents might deal with real estate attorneys, but from our buyer's perspective side, if it's something that has to do with your state specific lending and that's what they're doing there, then ask your mortgage advisor, make sure you guys have that taken care of. For us here, I've just seen it where you can have real estate attorneys come in to do certain things on transactions. And, it's basically just like an attorney, hourly rate, right? So that's something to know, because let's say if they got hours to do, that's a lot of costs that
Yeah.
it could add up. And attorneys don't go $10 an hour. I'll tell you that.
No, they don't. So breaking it down, some states use title companies and some states use real estate attorneys to close your transaction. The only time I really see real estate attorneys come into play here in, Oregon, Washington, California, is if it's in a trust, you're seeing through a transfer of title with family members. It's the only time I really use them, but they are part of the transaction when we are doing mortgages, and we appreciate them.
That was
every
the
day.
word, family trust. I was trying to find it up there. I just
You're trying to
couldn't.
find that trust. Well, you know, Casey, not everyone has a family dynamic like yours, which could be an HBO miniseries. So
Oh,
just playing with you,
and here
brother.
comes the comments.
They're pouring in, guys.
Okay, number 6.
Number 6.
We got
No. Just to wrap that up, you're totally right. Like the family trust thing is really big. That gets super complicated. So if you're inheriting money or moving things around, splitting up with family members, trust me, you don't want to hash that out over, you know, a hungry man and the Jets playing the Giants. Like you, even if it's in the bubble.
Seriously,
Yeah.
no, it's something you want a real estate attorney involved in, most likely, and especially if there's a handful of you. You got that property, you know, it's all 7 of you kids own the property that great granddad left, and 3 of you want to sell, 4 of you want to keep it. How we doing this?
Yeah,
So
it's part of it.
Next, Steve.
Number 6, we have credit report, credit checks. We have
Y'all gotta pay for that.
Yeah, we got-
yeah, you got to pay for that. Most people think.
I
it's
think
free.
one of the biggest one with the credit ones is people ask is like when they're doing an application, they're not buying it's a
Right.
to be determined. They're getting rolling. What do I have to pay for the credit? Technically, and mostly, at least with us at MLO here, we don't charge you up front for that. So that gets rolled into your closing costs at the end, like $50 to $100, depending what you're using, the complexity of the credit report, whether there's refreshes or resubmittals. But you should not ever have to pay up front for a credit report or applying.
or
That actually
application,
happens. Like
yeah.
1 out of 4 people are like, how much is it going to cost me just to apply? It happens a lot. People ask that a lot. So just don't be scammed by Uncle Joey calling and be like, hey, for $40, I can tell you how much you're pre-approved for. That is not legit. And you might get that call. So keep a heads up there. What else we got?
Good points.
and we're gonna show you that too. You're gonna see on, you know, anything that's disclosed to you guys, or at least your closing cost breakdown. You're gonna see the credit report charge on there, and know that it's part of your closing costs.
Was that 5?
That was number 6.
Number 6, we're getting.
Oh, we missed our break for
there. Well, we took it with was it Matt?
But we had to have our dance party. Shoulder bump.
bring the pop. Bring the bop. What I really want to break down mid-session, guys, is how people can get a hold of us. So we're actually going to build out a new reach out platform. It's going to be called the Are You Ready to Sell or Buy survey. So that's going to be coming really, really quick. But for now, we always like to let everybody know if you would like a no obligation consultation.
No obligation.
For 3 easy payments of, no, I'm just joking. You can reach out to us anytime. The MLO team is here for you. We can chat through any of the things that you need to talk through and build out a plan, whether it's short term, long term. We don't care. You're buying now, later. Doesn't
all good to
matter.
us.
And
We just want to talk.
Yeah, we just honestly just want to talk to somebody.
And we have a local number.
Yeah, how you calling us?
I got 503.
And VIP.
9038.
And we do recognize the fact when you look on your phone, it doesn't really tell you those letters. So it's a great way to filter if you're serious or not. If you can figure out what VIP stands for on your phone,
You can
look
figure out
it
what
up.
number those
Look
are.
it up.
You can get a loan.
You can have an opportunity
Hello.
You're on the way there. You are so close.
halfway there.
I love that our entire strategy is to take the piss out of every joke before people get to put it on us.
Yeah, exactly.
It's the key to happiness, I've learned.
That's right.
Oh my gosh, that was good.
Do we have any family comments yet?
Not postable ones that I can share right now. So we're on to number what?
Number
CK?
7.
7.
We're talking about extra insurance. We know that we have to have homeowners insurance or your hazard insurance, which is going to protect you from a home fire. Some
Water.
extra fire.
I don't know if it
insurance?
covers all
I don't-
water
I don't know if
damage.
you're
You
right.
know, you
There's
got to
some
talk
other-
to our.
Hey guys, this insurance only covers up to 190 degree heat. Now, we've got a high probability this could go to 50. Would you have to upgrade?
But we want to talk about
1995.
like some other things. If you're in a flood zone, there's going to be flood insurance that's going to be required. FEMA is going to put you
That
in a
is
flood
for real.
map, and it's very expensive. It's something that you can't get away from. So when you're checking out the property, it's typically disclosed on there if it's in a floodplain. So
but often it's not. I've had those and it stinks to know because
it's a stinger.
Flood insurance is, I mean, just to throw some, let's say like $250,000 house, just a low ball it, you're looking $150 a month on top of normal insurance just for flood insurance. So yes, as to CK's point, you should have it disclosed in the listing, but it often isn't to be more appealing.
Right.
And then often mortgage advisors that either were rushed into just writing an approval letter or didn't look at the property just won't know. And you can do that if you're just curious and you're doing this all on your own. To your point on FEMA, you can look up FEMA property eligibility lookup. I will tell you though, it's really hard to judge that map. Often I'll go in there, you have to type in a full address, and I come out of it being like, well, the address was right. I can't really read the map. It's really hard to read it. There's all these different things. So really you want to work with your insurance agent, if 100%. You will.
They'll let you know if there's an elevation clause in there, if you can get out of it, or if it's a partial, whatever it may be. Some states you might require earthquake insurance.
That's elective. Yeah,
there's
common in California.
Yeah, there's a lot of elective insurance, and that's what we're talking about.
The additional insurance in Florida.
I don't know.
Sinkhole.
Sinkholes. But CK's right though.
Gator snap deductible.
It's serious. You never know.
There's insurance for
everything. Insurance for everything out there. But he's right, because you're typically going to get talked or told about your home insurance, right? Because that's going to protect your home. The home's got to be insured. It's got to be insured. But there's other insurance out there, and typically the home insurance is very reasonable and affordable per month. It's kind of one of those things where it's like, hey, it's 5 Starbucks trips and your home's insured for the month. But
yeah, cut back, tighten the belt on a couple of luxury.
Yeah, but you throw flood insurance in there. I mean, I've seen flood insurance for $300-400 a month.
Yeah, flood's for real.
Your $2,000 mortgage just went to $2,500.
I think another thing too is, guys, people don't understand that when you get your initial quote or estimate from a mortgage advisor, when you're not in contract, it's an estimate. The loan officer, mortgage advisor can type in whatever they want, whatever they think the monthly premium will be. And there's so many factors, and that monthly premium affects the closing costs based on that 14 months or year advance prepaid. So that's a big swinger. So one thing that I explain is hey, it's going to depend on a few different factors: the house, the age, your credit score, how many people are applying for the insurance, and then the variables that we can't control. What are you choosing for a deductible? So typically the lower the deductible, the higher the monthly premium. For me, I would rather have a higher monthly or a higher deductible than a higher monthly premium, because if the wicked witch from the west comes in and blows my house away, I'm going to have no problem paying $5,000 to get my $500,000 house back. No freaking problem. Where some people are like, okay, well, I'll pay $100 a month in mortgage insurance, but if the wicked witch from the west blows my house away, I only got to pay $5. It's never going to happen. So you got to look at those deductibles and what it's covering, because that can swing big time between $50 to $100 a month on what your premiums are. And that's a big factor, and it ripple effects down to the closing costs. So
yes, sir.
Great point.
Gosh, I almost ran out of breath there. That was a good run.
Nailed it.
Another one, our JB is just on the other side of the wall here. Our producer, he's awesome. None of this would happen without him. We absolutely love Josh. He's killer. But he has HOAs requiring certain deductibles. I think one of the biggest things, Krista and I, our first home was a condo. It's now our investment property when you rent it out. So the HOAs typically will cover a exterior insurance policy that is carried by the entire building. So when you own a condo, the homeowner's insurance you're required to carry will be less than a normal single family, because you're really only covering walls in of the unit rather than walls out, which is included to a partial amount of your HOA. And that's per case, right, Christian? I don't want to say that's universal, but that's most common.
Yeah.
Right?
And I think, not all lenders are going to require the borrower with the condo to get their interior goods insured. Most of the time they will, but some are going to be like, well, that's your interior stuff. We just care about the walls on the outside. But yeah, it's something that can range from. I had a client that's purchasing a condo, sent over a quote, and I think it was like $800 or something. I was like, whoa,
For a condo.
that was just for the interior side of things. I'm like, I think you should maybe shop that around. And he was able to find it about, right around $435. It seemed more reasonable with the same exact coverages. So that just shows you from, insurance agent to insurance agent or company, how different it could be.
Yeah. And, we're going to have our boy, Tyler Ross, one of our trusted insurance people here, break it down. I love his perspective.
That's funny. He's the one that helped my boy out.
Yeah, no, I mean, Tyler's awesome. And he's one of the good guys, just like we consider ourselves most of the time, right, Casey?
Most of the time.
No, I just think there's a lot of different factors to the insurance piece. Are you bundling? Are you insuring the wedding ring and the family heirloom? So those are the factors there. Hopefully that helps, JB. And, Josh, if that didn't answer your question, you can always talk to me just, when we don't do this anytime. So no, we appreciate
our producer.
We appreciate we love him because he participates and he's driving home more comments and views for us. So next one, where are we at?
Number 8, we have an appraisal cost, appraisal fees. What is that?
Yeah, I think there's a big thing on appraisals, and let's break it down this to a couple different buckets. One being, first of all, what's disclosed to you is typically an estimate, right? But there's factors that could make the appraisal more or less. So like out in our neighborhood, it's usually $750. But right now, as of late, we're seeing a huge increase of volume. Supply and demand has made that more like $800 to $900. So there's a variable of a few $100. But you've got a good one right now that's closing this week, Casey, with a new build. So talk about, that additional fee to do what on new builds?
Yeah. So with those new construction homes, you just want to make sure, one, the appraisal is going to happen, for the most part on every home. And they're trying to determine, the value of that home based off comparable sales and stuff. You got a new home though. She isn't finished yet. She hasn't been completed.
Mm-hmm.
It's not just a home, a 70s ranch that's been sitting there for 50 years. It's brand new. So what has to happen is that appraiser comes out initially and is going to inspect that home, but they're really going to inspect it depending on how far along it is in the build, but typically based on plans and specs, and are going to come back out they're going to be required and need to come back out to sign off that home has indeed been completed and finished construction. And so it's something that I am constantly harping on and being aware of on our new construction deals, because it's something that has to happen at the very end, and you need to make sure it's there, because we can't close the loan unless we verify from the appraiser that the home has been completed.
The old 442.
Yeah, the old 442. Now we call it the 1004D, and I'm sure next year it'll be the 1369.
That's all lingo that no one needs to remember. But there's a final inspection on new construction. That's another $100.
Still call it a 442.
No, they call it final inspection. It's like $100, and it sucks too. Like there's certain things that they're nitpicky on, like all the plastic on the ground. I've seen one do another $150 charge to pull the plastic out the freaking gun. It's so silly. So you got to watch out and make sure everything's dialed in and ship shape. Other complexities to the appraisal could make it more expensive. So if you're putting a rush to it, that's one thing. You got to hurry. Acreage, outbuildings, gated communities, rural properties that take an extensive amount of time to drive to, island properties, all of those things, the appraiser that's being hired, which is third-party company, not the lender, it legally has to be someone different than an in-house person. So it's completely divided, but all those things could tack on to a higher
value too. Mm-hmm. Sometimes you might have to do a couple appraisals for your home. It might be required to have 2 appraisals depending on, that size and that value of the home.
I've never had that happen.
Me neither.
But you're saying it's something that could happen.
Some jumbos.
Yeah, so jumbos, $2 million required. Different amounts require 2 appraisals for sure.
If it's juicy, double rack it. Appraisal.
But yeah, fortunately, I haven't had that yet.
I don't know where to take it.
I'm going to keep this thing going because we're going to get to 10. I
We're
promise.
getting to 10, guys.
We're so close.
Normally we go a little
And
bit
this is a
shorter,
big
but it's
one.
good stuff.
We already kind of mentioned attorneys, and we're going back to our title folks and title fees and what those costs are. So, Addison, do you want to break that down for us a little bit? And what a common roundabout number, what you're seeing? Give me some answers.
Yeah, with like title costs, you got to understand that there's a couple different variables too with like, hey, what county and state you're in, because counties and states are going to have transfer tax, county tax, all these different things. Believe it or not, there's a per page cost that's associated. How many pages are printed for the deed and the title?
Right.
But the biggest chunk is going to be your owner's title insurance. So that's going to depend, $800 to $1,900, depending on what the loan size is. So the biggest thing to understand that what that does for you, which I think is a total scam, but it's required to have, is if there's any liens against the property that happened before you establish ownership with the house, that insurance protects you so they couldn't sue you. So it's very, very important. The irony of that insurance is the escrow closing fee, which covers all the title and escrow, people running around printing, closing, managing money. That's also supposed to cover the lien check. So that insurance is required and covers in case that company that is hired to check the liens misses something. It's a tough one to digest, but welcome to America where everyone gets a slice of the cheddar, as Casey would say, right, buddy?
Yes, sir.
And it's required and it's good. You never know. I had one story where a guy came back and there was a lien that was undiscovered. The guy had it written on a piece of paper. Yeah, it was like it was like a poker room hustle or some crap like that. But that insurance did actually assist it. Other like more serious examples could be, say, a business lien. Say you put a business owner own the house. They do this and get a line of credit. And they'll say, hey, I'll put my lien up for these materials to run my business, and it didn't get processed with the county, it didn't get checked, you bought the house, you don't want to inherit that. So that's a big chunk to the title and escrow. And I need to back up. I feel really bad because title and escrow people are really important, and I really poked at the logs there, but it's the insurance, not the people. So I just want to put that out there, that's a big cost to it. And I do appreciate our title and escrow people because they work their butts off to get deals closed. So
yes, and the title people are also ensuring us as lenders that our borrowers don't have liens or judgments against them.
Yeah,
you're buying a house that's unencumbered with any kind of judgments or liens, is free and clear, besides the one that we're putting on there for your mortgage. So it's very important we do a thorough check to make sure that your property that you're purchasing is going to be without encumbrance.
Okay, and then there's stuff that they can find that can make or break a loan. And that's, something that maybe even, we always hope our clients tell us everything, but sometimes clients leave some things out that maybe they forget or whatnot. And, if that's back taxes that we haven't paid in 5 years.
Yeah, the taxes are a big thing. Yeah, you want to have those taxes. So let's check all that.
Title can find that out for us and help us, so.
Number, should we do
we're down to the last one, folks. Coming in hot. We have number 10, surveys.
How did that make the list?
I don't know why that's even on there.
I didn't want to end with surveys. Let you guys.
We got to talk to Josh about the research. Jeez.
So there might be a survey just to do your lines of where your house is being set on.
New builds,
neighbor disputes. You be amazed what title will say your house is this, and then there's a fence going right through there. You're like, what happened to this 5 feet of my house? What's going on here? Well, there could have been an easement that was granted. We just need to find out, or they illegally built a fence on your property, and the old neighbors just didn't care because they'd have coffee every Sunday together on the porch, and where it's like, go ahead, Jackie, no problem.
A classic good neighbor, A-OK.
But now you want to go in there and be that new neighbor and tear it down.
Well, I think out here I see a lot, maybe I think you guys do too, a big economical driver for jobs here is Intel. And with Intel comes a lot of engineers. And there's a lot of engineers who buy places out here and they want to survey the place because they plan to expand, build. They want to know the elevation. So those are additional costs. Say you're buying an acre and you got a small little farmhouse and you want to build that, a Ninja Warrior course that's indoor. Do you like that? That was
That was really good.
Two girls. I know you would
You've been
like
thinking
that
about
one.
this,
I
haven't you?
actually was watching it the other day. This dude was 57, killed it. 57.
So the rip is though, like, hey, you want to build something. A lot of engineers do want to do a survey and know elevations and definite specifics because they're thinking about it.
And it can get a little testy with the neighbors sometimes. So we had one, and it was just a family kind of thing.
But you put like a 30-foot cinder block wall up, right?
Yeah, so I didn't want anyone to see in the house, so I just covered the whole thing with concrete.
Casey just wants to walk around naked in every square foot of his entire property, indoor or out.
Nobody sees it. The funny thing is it literally was a fence, and we were replacing a fence, right? And this fence again had been in the same fence position, since this house existence, right? So we're gonna put a new fence up in the same fence line. Talk to the neighbor, everybody's cool, right? All of a sudden, survey wants to get done. It's like, okay, cool, let's get a survey done. It's an older house, they get it. The fence line was actually 3 feet farther on our property side. So it gave that neighbor 3 feet more of their backyard. Didn't want it. I want that on the property line. I don't want the extra 3 feet. You can have it back. This fence, and we're paying for everything. The fence was almost done. We didn't even want the 3 feet. Keep the 3 feet. Take the extra 3 feet.
They changed their mind.
We don't want it. We want the line where the line is. And
What'd
so
you do?
we had to have a new fence put on.
Wow.
We had to take our 3 feet back.
This is at your
Wow.
current place?
No, this
Yeah,
is a previous house that we were at. But yeah, it was just so some people don't want the extra good neighbor thing. They want it on the line.
Some people just can't deal with change,
That's good.
even if it benefits them, right?
That's good.
CK?
That's
Good
good.
point.
Bringing it together, guys. Those are the 10. That's the 10, right?
Those are the 10. We went through 1 through 10 today of what is our topic again?
All the costs outside of just your down payment.
The 10 costs of buying a home, you must know.
Exactly.
That's a big
And to top it
Outside.
right there, guys, that was everything we talked about. We never talked about really down payments. So those are all costs associated or
Outside of down payment.
can be
Outside.
with your home. Yeah.
Yeah, and just to summarize, guys, I think the biggest one, your inspection, sewer, radon. Those are the three, that's the turkey effect. You got 1, 2, 3, sewer, radon, home inspection.
Yeah.
Got to get those 3 done. And prior to moving forward, those are right out of pocket. Earnest money, once again, yes, whatever you put down as a good faith deposit out here, average 1% of the sales price, that does get applied to your total cash to close. So it doesn't go to mortgage advisors, even though we joke around. Gosh.
Next time.
Next time.
So to round it out, thanks so much for listening, everyone. We truly
Yes.
appreciate it. This one went like a lot of research. 10's a lot. 10 innings. How many innings are in a baseball game?
9.
Yeah, that's more than innings in a baseball.
Not in my baseball. 11. I like to go extra innings every time.
Playing basketball.
Yeah, Casey plays video games. I'm talking about like real sports.
Cricket?
You
Where's
know
our
how to
cricket?
play
We have a
cricket.
cricket.
Yeah, we got a
We have a
cricket.
cricket.
Oh my goodness, we do.
Reminds me of Casey Jones, Teenage Mutant Ninja Turtles. You ever played any cricket?
Chicka. Well, to bring it down once again, guys, thank you again for listening to this live broadcast in the MLO studio. We're bringing it hot every time. This is your host, Patty Net, and next week we're gonna, well, it might even be this weekend. Casey's gonna bring something hot for our VA veterans, the top 10 things you need to know about VA loans. But CK, do your route, tell them how people can reach us, how we can help them, et cetera, et cetera.
Yeah, you can direct message us on Facebook, YouTube, and
If you're listening to your podcast, you can check them on iHeartRadio,
Mm.
Apple iTunes, Spotify, and don't forget to catch these live shows that we try to pump out every week on Facebook, and the YouTube channel's kicking off.
Yeah, all those people listening, you can check us out. Facebook Live. We do all of these. Most of like 97% of them are all in the broadcast studio. Joshua Billups, our main man producer on the other flip side of this camera, always setting us up, trying to make us look good, even though that is a real challenge for him, and he does simply remind us that every single day. It's a great way to start our day.
Oh, let's talk about this.
You got
The
some
MLM?
swag.
Oh, our little swiggy swag. Oh, this is one of our new items here. No one on the podcast that's listening can hear, but if you can see us, we have our swag edition. So hit us up if you'd like to see if you can get your hands on some goodies.
Goodies.
Bring it hot. Oh, the hat. We got the stuff for. Oh, we're bringing it hot. The crowd's going wild. The crowd's going wild. Oh my gosh, too fun. It's hot. I don't even know. All that throwing, I'm not used. We've done hundreds of hours that I've never had anything thrown across. I love that.
Oh, wait, we didn't have that in there before.
Well, yeah, we totally should have.
Yeah, bring it hot. It's a little self-placed.
Well, we appreciate all our listeners. Thanks again for checking us out. And we'll be back next Wednesday.
Oh, next Wednesday, baby. Anything from you, Mr. Casey?
This is ML.